my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I will stop looking at my daily charts and instead concentrate on the longer term view, using my monthly, even yearly charts to commentate on a market. If you would like to discuss any of these, I'll only too happy to hear from you. So let me now introduce today's longer term chart. Today I'll be looking longer term at New York coffee. The key pattern here in recent years had been the 2021 to 2022 diamond top pattern. It's a little lopsided, but it's there nevertheless. There's also another longer term pattern dating from as far back as 2016. I will quote my original commentary from the start of 2019, which I had repeated here ever since, and I quote, "Finally, there is a possibility, just a possibility, that the action since the drop back in 2016 could be a type of bump and run reversal pattern. It looks very much as if it could be, but it is early, so watch carefully," end of quote. I added the following comments in 2021, and I quote, "2020 has done everything it could to stymie that bump and run reversal pattern. For the most part, it's been effective, but it has not killed off the idea. I still think we might just have such a pattern. We'll just have to wait and see," end of quote. Well, in 2021, this bump and run reversal pattern finally came into its own, for a brilliant move higher, reaching both the primary and secondary targets for the pattern and finishing off handsomely a diamond top pattern in late 2021 and into 2022. I said in 2022, and I quote, "Realistically, the next topside area of significant resistance is a congestion between 265.5 to 267.75, and then the August to September 2011 high area between 287.15 and 290.85, end of quote. However, prices stalled before getting up to test the resistance congestion, turning lower. In doing so, prices broke down through the lower trend line of the diamond pattern, fulfilling both the primary and secondary targets on the way down, and at the same time breaking down through the significant 50% Fibonacci line of the 2011 to 2019 move at 198.30, the nearby congestion between 195.90 and 197 even, and breaking below the 50% Fibonacci line, the 2019 to 2022 move at 174.05, as well as all the moving averages, but only just pushing below the 5-year moving average, currently at 156.95, and not closing below it. In early 2023, prices rebounded, with a combined key reversal up and bullish engulfing pattern, if only just on the latter. Yet the rise struggled high, unable to close over the important 50% Fibonacci line of the big 2011 to 2019 move at 198.32 before failing and testing lower again during summer and early autumn, this time closing below the rising 5-year moving average in September, though again reverting back up again immediately after, with a monthly key reversal up, thus only managing one close below it. The subsequent rise has been lower than the one earlier in the year, much like the fall had been higher than the one earlier in the year, and this ever left an ominous indecisive doji cross right at the top of the recent market. Now, last year I indicated that the action in late 2022 and leading into 2023 may be a possible bearish halfway hesitation in construction. This is still not outside the realms of possibility, but the action since has thrown a few more possibilities, both bearish and bullish. We may have that action now as a possible double bottom in construction, or a possible cat's ears pattern in construction. The latter pattern is a double top in a descending market pattern. I am hoping by mid-2024 to have a better idea of which it may be, or if another pattern is altogether. In the meantime, pay close attention to the 50% Fibonacci line at 198.32 and the rising 5-year moving average, currently 187.70, both above. At the same time, look at the 5-year moving average and the 2-pointer uptrend, currently at 145.83, that are below. Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofbig and ADM Investor Services International Limited. And here comes the final bit.